Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 22nd of March. All right, now, as you turn on your screens, there's a few interesting things happening. The bit of a gap here in the dollar index on my screens, at least. And there's a bit of a gap here on a couple of pairs as well, in particular the Aussie and the Kiwi. Now, and obviously a little bit of dollar strength coming out of last week to end the week. Obviously, we had the Fed, short term looked like a bit of a dollar sell with the no increase in rates for the next 2 or 3 years. But what we've seen across the board is those US treasuries, this is a long-term play, not a short-term, and they have continued to the top side. And that's going to put an underlying bid tone in the under the US dollar. Now, when we talk about bid tone, bids and offers, a bid tone is like a buying sentiment, right? Going up. That's what we're sort of talking about. So US Treasury yields going topside is going to give the dollar an underlying footing. Now, what's the go with the gaps? And I've just sort of been looking around, and sometimes it can be a glitch in the platforms, but other times it's something else. Now, what we are seeing is, if you've read across the board here, the Fed has lifted the they had a capital requirement, okay, on the banks in the US, the major banks. Around the pandemic. Now that's been relaxed, so they've got some more cash to use. That's put a bit more of a demand in the or a bit of a drive higher in the treasury yields. But the key part here is coming back to where Donald Trump, when Donald was in power, throwing barbs at China. Well, Joe Biden's come back to the table with China, and China's pushed back immediately, right? Probably more aggressively. I don't know if it's a bit of a payback for what Trump was doing, but they are really giving it to him. And they're talking about down here, Beijing, right? This is coming back to exactly a bit of tit for tat from where Donald left off, is restricting the use of Tesla vehicles due to national security concerns, right? Exactly what the US were doing last year. China's come back, and that's not, as the Reuters or Metastock says here, it's an ominous sign for Apple and other tech giants. All these tech giants are based in China. All their products are getting made there. So now China has them by the short and curlies and are controlling things there. So this is going to be a bit of an interesting one, because you're seeing the US equity futures just opening to the downside, right? It's not a big move just yet, but this could be a much bigger story. That negative move in the US equity futures is really giving us a clear risk on, risk off sentiment, or risk off in this situation, where you got the dollar block going down and the dollar pairs going up. Once again, dollar yen, the odd one out, right? So it's just doing its own thing. But the dollar, it's only slightly rallying, and it's rallying against obviously euro, sterling, Aussie, and Kiwi, and that's against the underlying. Well, it sort of goes with it, I guess. That goes against the sort of sentiment that's going around. But so we've got a risk-off situation on the equity markets. US dollar going up. That should support the move on the treasury yields. Okay, so I don't know if this is going to be a double whammy. We really see the dollar take off early in the week, but it's an interesting one to see how this plays out, because China has really set the tone, coming back to trying to really put Biden in his place, and this could really blow up. So we'll have to see how this one plays out. But if that is the case, well, then keep an eye on the Swiss and the yen, the safe haven trades there, because they could really come into play. Now, also, when you're just looking across the FX Market Insight, have a look across the board, not only what the majors are doing. Whoops, let's put that line straight through that. So you get the majors at the top. Keep an eye on the safe havens, see what they're doing, the risk on, risk off pairs, and also some of the commodities, because some of these are safe havens as well. And you can sort of get a bit of a picture for what is what's going on. The safe havens at this stage not rallying aggressively, so that trade isn't in play just yet. The risk on, risk off pairs, okay, like Aussie, Kiwi, CAD. Well, as we can see, Aussie and Kiwi are definitely in play with the US equity futures. So it's going to be interesting when the North American session starts, right? It's been the epicenter for all the moves for the last, well, since the start of the year at the very least. So we're going to be keeping an eye on what happens when the news breaks and the markets open up, how they translate that Chinese news, and see how that sort of really plays in. At the moment, because the North American session isn't open, all we can do is watch the US equity futures, and this gives us a gauge of what's going to happen on those US equities, right? And as I said, risk-off sentiment. Well, we're seeing a bit of a mixed bag here. It is only early doors, but the dollar block sort of just trading lower. But as I said, no major moves yet. This could escalate into something much bigger. All right. So, and then technically, when you're looking at the start of the week, technically, okay, having a look across the board, see where these pairs are. I'll probably say it every week. I still like euro down. If this Chinese situation blows up into the equity markets, then we could see a serious risk-off sentiment. That would really give that euro the momentum it needs. Sterling, well, it's caught between what's happening on the dollar and this whole vaccine rollout in the UK. It's susceptible to a big move to the downside. And Aussie and Kiwi, well, they've just been drifting lower, and they do look like they're set up for a couple of 100-point move to the downside, but we'll have to wait and see. Dollar CAD, well, oil's bounced back from $59. It's sort of stabilized things here at the moment, but once again, dollar CAD just over 3-year lows a couple of days ago. It's now shooting to the top side. You'd think it'd find fair value around 125.20, maybe stabilize. And then you've got the safe havens, dollar yen, dollar Swiss, and then the dollar index. Okay, so dollar index obviously going to be really pushed around by the euro predominantly. So that's it. Bit of a tricky start to the week, right? Because if you are looking at those gaps, you find gaps in any of the major pairs, you need to go and find out what's causing those, and then start to work out where direction's coming from. At the moment, because it's the Asian session, don't get yourself so fixated on the treasury yields. They are giving, as I said, the dollar an underlying big tone. The volatility index still around 20. That's pretty nice. Tells me that the market isn't too nervous about too many things at the moment. That could change if this escalates. But right now, all we can do is let the Asian session open, see where the markets are being directed, and that's through the equity futures. There are only small moves at the moment. As I said, they could build up. We'll have to see how that plays out through the next 24 hours. It'll be interesting to see where everything is this time tomorrow once we've had a full 24 hours of that North American session being open. Okay. All right, guys, have a good week, and all the very best. Cheerio.